This is what a real crash looks like. Bitcoin dumped below 73,000, down close to 19% since the last weekly market update video we did. And honestly, if you're feeling it right now, that's fair enough, because this is nasty. Because moves like this can go two ways. Either it starts to stabilize or it rolls into something that can make the whole year feel heavy. A crash doesn't turn because the mood changes. It turns when selling stops getting the follow through. And in weeks like this, guessing is what wrecks people. Chart 1, Bitcoin, and what decides whether this starts selling or keeps sliding down further. And chart 2, the ISM, because if the macro backdrop is getting worse, bounces can fail, and if it starts improving, fear can cool off quicker than most people expect. Now, Bitcoin dumped hard and everyone's calling it crash. Oz, we need to keep this grounded, so let's bring up the Bitcoin chart. And is this it? Have you succumbed to the dark side of the force and crossed the line? Are you now a bear?
Yeah, Doug, thanks for that introduction. And this interesting question, am I a bear now? And I will categorically say right now, no, I'm not. And people might think I'm crazy. They might think, oh, I haven't been posting on X. That's the reason I haven't been posting on X as much is because I'm just going to let this play out. And, a lot of, everybody or majority of people, I would say, they're looking at this fractal. You see it here. So they say, this is the equivalence here. You get the extended top. You got the bear flag here, bear flag. You get the breakdown. So we got the breakdown. Now we get a little pump up and then a further breakdown, going down to 50,000, 40,000, maybe even 30,000 before sometime in Q4 this year, 2026. And then, it's time to buy again. So that's the general 4-year cycle time, right? Me personally, I haven't turned bearish on the market. Not yet anyway, right? There's still a few signs for me to go, and that will come in February. Like I said, the February 1st, I will definitively say exactly where I think this is going. January is was a key month, and this month here in February is going to decide it all. And personally, right, so the way I see it, let's take it back into a macro scale, right? For Bitcoin, you got the 1, 2, 3, 4, 5 of the third, right? So this is the third wave, and now the ABC is, in my opinion, this is the most this is probably the most ideal count for this for Bitcoin going forward, right? And this is the count I've had for months now. So what we can look at here is from the A, down to from wave 5 down to the A, up to the expanded flat B, right? And where does that get to? And you get to around the 1.618, which is the level I'm looking at, right, for the bounce, in that sort of area. So let's just tighten this up a bit. So we're very close to that level, right? 71,219. So the 1.618 is the most is I would say the most common level for an expanded flat, all right, to actually finish this correction. So what we have here, in my opinion, so what we have here is, if we look at the ABC, so we have the A going down, B, C, and how we can further illustrate that, we've got the 1, 2, 3, 4, 5. You got 5 clear waves that I can see right now. You can count it 1, 2, 3, 4, and now 5, and that's quite a clear picture coming down. And I'm expecting it all to tag around this 1.618, base around, and then reverse to the upside. So that's the bullish plan for me going forward. Yeah, it's always good to have a bearish plan. If it is going to go into a bearish plan, I don't think we're going to drop to oblivion right from here. and what you would get in a short sense, right? If this is going to continue in the 4-year cycle, this is for me just the A wave, then you'll get the B, and then you'll get the C, going down. So nothing will go down in a straight line all the way through, but I'm not really, this is a secondary option, but I'm not, my bias right now is not that this is going to happen personally. That's what most people's biases are. We get the A, probably get the B. The B, in my opinion, wouldn't close below $98,000 right from here. If anything closes monthly above $98,000, it's going to break all-time highs, and that's just what I think. As a guarantee, this level here, this $98,000 level, is so important that if any monthly close happens above this, new all-time highs will be coming swiftly, in my opinion. So that's a secondary bearish case, but that's for all the bears out there probably watching this video. But that's not my ideal scenario. My ideal scenario is that the wave C is close to ending now. Maybe a little bit more to go, $71,000, and then start reversing back up. Get back above this range. And you think if February closes, and I'll give you a little. I think this will be such an important piece of information, I think. So if I give you the exact level, and I think this is going to be, a great piece of information for to going forward, right? If February closes, and let me just get this level here. If February closes inside 75,635, you don't want to be bearish. That is the level you don't want to be bearish. And this is the level up here that if you get above, sorry, not here. So that level there, 98,000, monthly close above 98,000, you definitely don't want to be bearish. So that's the two levels that I'm looking at from a high macro term time frame. But like I said, this correction, this wave C, similar to the video that we did last week, the 1.618 coming in at around $71,000, $71,500. Tag that. That will be, in my opinion, the end of wave C. And it's always good to so if we look here, back here as well, we can see, how did it differ, or is it doing the same sort of thing? So if you take it back to the last one, right? So this is the last sort of wave. So if you want to count this as A, B, C, right where it's now, where everybody says we are here, basically we've just broken down, right? That was the 1, 2, 3, 6 measured on this sort of scale. Already we are down here, on a similar sort of scale. We're down to here. If this was measuring, the ABC of this wave, so the low to the high, we're down at the 1, 2, 3, 6. So it's very different. It's very different to even on the Fibs scales. And the 1.618, I think we see a bounce and a recovery. So yeah, I'm not bearish, when it comes to this, and let's see how it goes.
Now, Oz, before we do move on to the ISM chart, because this is something that's grabbed everyone's attention, I think that you wanted to give the viewers an update on Bitcoin dominance. So let's have a look at Bitcoin dominance before we do move on to the ISM chart.
Yeah, and dominance for me is telling at the moment. It's if you want to be bearish on altcoins, a monthly close above 60%. Monthly close, yeah, not a daily close, not a weekly, a monthly close above 60%, then you can be bearish. I would be bearish as well. If a monthly closed above 60%, then I would say yes, altcoins are going to go down another 50% at least, right?
That's not comforting, for a lot of people who's invested in altcoins. But the reality is reality, isn't it, Oz?
Yes, that is just the reality, right? But I'll take you back to a few history points, right? Above, yes, like I said, above, yeah. If Bitcoin dominance closes below 58 point, this range is so tight, right? So it's a very good range. If Bitcoin dominance closes below 58.6%, 58.64 to be exact, you're going to see a big altcoin season. And I'm pretty certain about that, right? A monthly close, but you have to understand it's monthly closes. So this is not daily, weekly noise. This is monthly closes, right? And that's the way I that's the way I roll, right? I prefer the higher time frame charts, right? A monthly close below 58.6%, roughly, you're gonna get a massive altcoin move. And I'll give you an example. I can give you many examples, but just so this video doesn't take too long, I'll show you. I'll show you, for example, 2019, and we'll go back to 2017 as well. Just a quick overview. So you see January here, right? It starts January, you can see, and I normally draw a parallel channel when it comes to January, and you can see the first monthly candle closed below the low of the January low, and that signified you can get into altcoins in January. Yes, we had the COVID crash that retested it, but regardless, buying altcoins in 2020 was a smart move. So this is just for the yearly outlook, right? But then what you notice as well, it's very key as well, that January 2020 could not close above the previous January's high, and that's when you got the massive alt season, February was the month, you could say. January closed, the January range was quite wide, and then February closed below, and then you had the massive cascade. Now this range that's happening now, right, is very tight. It's a very tight range, and it's more similar to the range that we had January 2017. The range again here, very tight range between 96 and 94%. Yeah, just a 2% range. You can see quite clearly in March 2017. So February didn't close below, so there's no signaling for February. February retested the highs. You can quite clearly see if I zoom in. So there we go. Yeah. So you got the January range. February just was in the middle, so there's kind of no signal there. March was a signal, and March 2017 gave you that massive altcoin signal. So, and if you go vice versa, so you can see the bearish case as well, because we want to see, we just don't want to look at the bullish cases. You have to look at the bearish cases on this as well. So if I take let's take a January 2022, for example, right? January 2022. You can quite clearly see, right, the range is a wide range. You close above it in February, and that tells you the year is going to be bearish, and 2022 was bearish. You can see May, June, and then it was a bearish year basically for altcoins 2022. Even though August came back inside it, but generally it was a bearish year. And lastly, let's just go at the last year that we just had, which was 2025. You can see quite clearly the Jan range. The Jan range again broke above it in February, and it was quite a bearish year for alts. And this is where we are now. So my point is, if this breaks below 58.7% or 58.6%, I think you're going to get a really, really nice surprise for altcoins, and that's what I think is going to happen. I don't think it's going to be a bearish year personally. But yeah, that's a quick update on the BTC dominance of the altcoins.
Okay, so that's the internal crypto read Oz. Now let's bring up the ISM, because if the macro backdrop is leaning against risk, it can change how these moves do develop. So ISM chart right now, what is it signaling about a wider backdrop for risk, and how does that change your read on Bitcoin if ISM improves versus if it keeps weakening.
Yeah, and it's quite funny, right? Because the macro backdrop is falling right into place, exactly how I thought it was going to happen in terms of copper gold bottoming out, ISM improving. This is just basically a copper gold chart. It's the ISM chart, but it's just you can put copper gold and it's quite similar, all right? And I've highlighted the 50 level here because 50 level is important. And I've read a lot of takes. For example, the ISM was above. Let's look at a bearish case, right? We know 2022 was bearish, right? So we can take a random pivot point in 2022 and say, in May 2022 the ISM was at 56, but we had the FTX and Luna collapse, or the Luna collapse happened around then. It doesn't mean anything. That's not how you read this chart, by the way, right? You read it at inflection points, and that's the key thing to understand. You can just look at this chart, right? Now this chart goes all the way back, to 1948, but obviously we're going to look at it from the crypto period. And what's important about this, right? If I look at this chart straight away, the two most important things that come out to me is this massive drop here and this massive drop here, right? Which is, the 2008-9 financial crisis and the COVID crisis, right? And in between there, you find levels. You find levels where the ISM normally turns, and those levels are around, I would say 47, 46 is the level, and that's the level I was looking at. And it's, we've been in that level for, about 2 years, and that's why you haven't seen altcoins follow their normal cycle. You haven't seen Ethereum, you haven't seen all of these sort of things, because it's been in contraction, the economy. There's not been a lot of growth, and you've seen gold spike and the metal spike. But what I've done on this chart, right, and you can see it for yourself, and you can disagree with it, you can agree with it. It doesn't really bother me, because what's going to happen is going to happen. But what you can see is that, I've put 4 points here. I've gone all the way back till since the crypto phase anyway, 2013, 2016, 2020, and now 2026. And I've highlighted the first break above the 50 zone after it's coming down from its bottoming phase or area. So what I would say is, this sort of area here, we can call it, a bottoming area. If we go back throughout all its history, right, apart from the major crashes, which are probably big crashes in the market, 1980, 75, the massive what was the 1940s correct? What was that correction? The biggest one? I forgot what they called it, but the most notorious one that you always read in the history books, when people were borrowing money of cash because it was nothing, back in the 40s. So those levels are extreme levels, but in between them you get these sort of levels between 45 to 47, and what you've had is, we've dipped into these levels and then moved above it. Now if I show you the inflection points, so this is the first point we've gone above it. Okay, and what you have to do, there's not just one print. So this is Jan, right? This is the reading for Jan. February also has to stay above 50, and March, and you have to have at least a couple of months where it's above, so it's not a head fake like we had back in 2025. You want sustained levels after the first break to actually build confidence in the ISM. Now when you overlay Bitcoin over this, right, and this is something you can quite clearly see yourself, and this is just history, and things can be different. Yeah, they may be different, but I would say I would go with the probability and say they're probably not going to be different when this happens. So the first break you can see quite clearly, right? Let's just get Bitcoin's chart bit in there, right? So you can see the first break was 2013, right? And Bitcoin was coming off a stabilizing period, I would say. There wasn't much movement going up or down. It was stabilizing. So if we just zoom into Bitcoin, you can see quite clearly Bitcoin was it topped in August 2012, intermediate top at $16. It went down to $10, so from 16 to 10, and then stabilized, went up, and then as the ISM broke above its 50 zone and had 3 prints above, so that was 3 prints above, you see Bitcoin make its high and continue its bull market, right? What you find here again, the cross up here, the next one was in March 2016, and again Bitcoin made a top a few months earlier in November. Obviously that's the top, but just the intermediate top, right, at $500, came back down to $370, right, in that sort of period. And then as the ISM broke, had a few months above the 50 level, you see Bitcoin continue to move up. That's the first break. Let's go back to the 2022 cycle. Again, you see the COVID crash happen. Bitcoin made its intermediate top in February at around $11,000. You can count the COVID crash in if you want, as that's extreme. Let's just say it went down 30%, 40%. And then as the ISM broke up on June 2020, you see Bitcoin and the ISM had some prints above it. That's the most important thing. You see Bitcoin move into basically all-time highs. And now what we've had again is Bitcoin has made like a top, you can say, in October at $125,000. We've come down to where we are today, around 73,000. It's made its high. Now what you want to see, this is the key thing. What you want to see now is the ISM continue to print above 50, and I'll go into the detail of what you should be looking for within the ISM. The ISM is just a headline figure, but what's more important is what's inside the ISM. And the last thing I want to show you is actually gold, because gold is very fascinating when it comes to the ISM. So if we look at these last 3 periods of the ISM breaking above its key level, right? What you notice with gold, so ISM broke in this, first one in December 2012, 13. Gold had already topped and it was on its way down into a correction. If we look at it back in 2016, gold had one more leg up and then was in a corrective period. If we look at it in 2020, you can see gold topped a couple of months after the ISM printed above 50. And what we see now, has gold topped again, or is there going to be one more high? But it's very likely that gold is topping. Okay, the start, the signals are lining up quite interesting, that this is lining up quite well, right? Obviously price action for Bitcoin is right now, and the crypto space is what people are panicking about, but macro wise it seems to be okay. Now what you want to look at is the new orders, and this is something that you look at. So new orders has jumped to 57. That's a massive jump from 47. So that basically that 20% rise that is done this month. If new orders continues to be about 50, right, that signals demand in the economy. So people are ordering, there's demand, there's demand for goods, demand for services, right? What you'll find if the demand stays for the manufacturing for new orders, right? So this is a key chart to look at as well. You're gonna see, and you can see after COVID, right? This is the COVID just jumped. And if we look at 2016, right, when new orders jumped up, and it's quite similar to what's happening in March 2016. New orders jumped to 54 that time, went up to 57, retraced, and then went back up. And so we've had that first spike up above 50, which is a great sign. The only difference, now this is what people don't understand, the only difference, right, that where there's a slight worry and it's different to 2020, it's different to 2016, is basically the prices paid for goods. It's at 59, so it's quite high. Now, if we look back to COVID, right, when it jumped up, prices paid was around 35, and towards the end, inflation was going crazy. So that's when inflation started to go out of control because prices were too high. For the ISM, for the ISM chart. So if we look at 2016 as well, prices paid when it jumped up was around 40, and then as you go up, as things start getting more expensive, inflationary fears come back. So what we want to see is prices paid. We want to see it stabilize. We don't want to see it go up because then it brings inflationary sort of concerns again. So prices paid, if prices paid stay stable, it's been downtrending now since March 2025. So from 69, it's been downtrending. So it obviously brings the inflationary pressures down. People are saying this is because of tariffs. Tariffs have raised this prices, and this is the reason that you've seen a kind of jump, and this could be a one-time jump. But what will be bullish for the market, so to say, will be prices paid trending down, orders staying up, and the ISM staying above 50, and that would be the perfect mix, and you'll see risk on expand. So hopefully this was too technical, this video, and for me, I'm sorry, I'm still not on the bear side, not yet anyway. Sorry to disappoint a lot of people who want me to say, yeah, I'm bearish now. It's just not going to happen until I see my own signal. And once I see my signal, then I'll say, yeah, I'm bearish. And the 4-year cycle played out, and it's over. I don't. People are looking at price levels, price action, and seeing a 30-40% drop for Bitcoin. People would be probably calling this a bear market as well when Bitcoin dropped from 63,000 all the way down to 28,000. That was, if you think about it, that wasn't a bear market, right? If it was in today's day and age, probably people say that is a bear market. So prices went from Bitcoin crashed 55% and then made new all-time highs. Right now, what we've crashed from the high, we've crashed 42%. For me, at the moment, it's not a bear market, and time will tell. Time will definitely tell, and I will tell you when I'm bearish, but right now is not when I'm bearish. But hopefully that makes sense. Maybe I'll come back on X and do some posts, maybe I won't, but we'll keep on doing these weekly videos, and tune in, and you'll get my thoughts every week.
Yeah, and just as Oz was referring to, I think post-war recession, when manufacturing war production stopped overnight, massive factory shutdowns, and defense contracts are cancelled during that period, and obviously that caused an issue regarding manufacturing activity. But yeah, it'd be interesting to understand your thoughts, viewers, and if you want deeper analysis, check the description below, because on Monday Oz actually gave deeper analysis on these charts and more breakdowns and the full framework behind the scenes with the exact levels, what we think are critical and pivotal, and what that means for your Bitcoin, Ethereum, and altcoins bags. So check the Alpha Insider link below. And yeah, question for you: what do you think? How are you feeling? Bearish, bullish? Is this a trap, or do you see it sliding down more? And is 2026 the death for you? And see you in the next video.